Good morning and welcome to day 2 of the ArabNet Digital Summit. My name is Arthi Tandon. I am the Executive Director of Smart Cities New York, and we are so honored and pleased to serve as one of the content partners for the Smart Economy Forum along with Zishay. In this hall, we will be discussing the exciting topics of blockchain, AI, the future of mobility, data for governments, and other similar topics. As you know, the other halls will have investment discussions as well as real estate tech. All of this, of course, can be found in your app, so I hope all of you have downloaded it and are making sure to network and be up to date on all the latest notifications, the agenda, and everything else. I'd like to now welcome to the stage CEO and founder of ArabNet, Omar Christidis, who will launch the 3rd edition of the State of Digital Investments in MENA report. Thank you, Omar.
Thank you. Good morning, everyone. We're so excited to be here with you all at the 6th edition of the ArabNet Summit, the 2nd day, bright and early in the morning. I know usually it takes people a little bit of time to get in the morning on the 2nd day. And so thank you for being here. And we're excited to kick off today with the launch of the 3rd edition of our State of Investments in MENA report. This is the most comprehensive report on investments in tech startups, equity investments in tech startups by regional institutional investors. And we're privileged to be partnering for the 2nd year in a row with Dubai SME to release this report and to be kind of collaborating with them and their vision to promote entrepreneurship and innovation in Dubai and the UAE more broadly. And I would thank Abdul, Janahi. He's with us here today in the front row. So if you have questions or things that you'd like to address to Dubai SME, him and the team are also available if you'd like to connect with them or learn more. And so without further ado, over the last 5 years, we have been collecting a tremendous amount of data. And we collect this data directly from the investor community. So we go out to the investors, we ask them to give us their data. In addition to that, we also collect all the publicly disclosed deals that took place in the region. And we've aggregated information about over 1,000, almost 1,100 transactions that have happened over the last 5 years, totaling over $2 billion worth of investments. And this is what we're going to be going through today. I'm going to be giving some parts of the research today here. We're going to be diving in further in the startup track on the other side. Later this afternoon, we'll go into a bit more detail. So let's start out first with the investor community. So our first section maps out who's investing and in what. And if we look here, see if I could do this. This is the number of investors across the years in the Middle East region. If you look at when ArabNet started, we started between 2009 and 2010, so we could say about 15 investors in the region. 19. We are today, year to date, at 199 institutional investors in the region. So more than 10 times the number of investors in the last 10 years. And what's really interesting is if we look at just the last 5 years, the compound annual growth rate of the investor community is 31%. Which is a very, very fast growth rate in terms of investors. Here, if you look at the orange bars, that's the number of new investors that have launched every year. 2015 and 2016 were banner years. We had almost 40 investors launching in each of those years. We had 26 investors and funds launching in 2017. But you can see even from the shape of the orange line here, how the number of new funds are increasing year on year. If we look at where those investors are located, the UAE is the hub for the investor community, and it has been for the last 5 years, and this hasn't really changed. It has hovered around 1/3, so 1 out of every 3 investors in the Middle East region are based in the UAE. Saudi Arabia takes about 20%, although there's been a little drop in the last year. The largest growth areas have been in Lebanon, which has jumped from 7% to 13% of the investor community in the last few years, driven by the initiative of the Lebanese Central Bank Circular 331, which is an equity guarantee program for investors If you're not aware of this program and interested in the entrepreneurship landscape, you really should look up that report, look up that circular, because it's really stimulated a lot of investment in the market. Egypt had been shrinking for the last few years due to a lot of economic instability, funds that had stopped really investing. And just in the last year, we saw the launch of Algebra Capital. We saw the restart of Flat Six Labs in Cairo. And so we are seeing an uptick there. And the other gainer is really Kuwait, which has gone from 3 to 5% of the community. Just in the last 12 or 18 months, we saw the launch of 3 to 4 new investment funds. KISP, we have Seeds, there's been Faith Capital. And so we are starting to see a lot more activity. And we are seeing exits in that market. So one of the most interesting exits in the Kuwait market, the $100 million reported $100 million acquisition of Carriage, only about 12 or 14 months after they launched. If we look at, this is the distribution of the investors by type and by geography, so we can start to see where the gaps are in the different markets. And so the first thing I'll point out is accelerators. And if you look at that line, almost every country in the MENA now has an accelerator. It's the most common type of investment institution in the MENA region, and it's often the first type of investment institution to be launched. And then if we look at other markets, Egypt has no growth capital funds. This is, while they have a very robust ecosystem, almost 20 different types of investors, but there's no growth capital. Kuwait has an early stage gap. We can see there are 5 VCs, but no seed funds and accelerators in Kuwait. So, and then if we look at Morocco, there's also some significant gaps. But as you go further down to the right, you start to see the ecosystems are far less comprehensive. Now if we dive into the actual investments that took place, and here we've aggregated and analyzed the data, and this is the number and value of investments over the last 5 years in the region. And so you'll see in 2013 we had 146 deals and $194 million of investment. And that's about $1 million a deal. If you look at 2017, we had $650 million of investments and 272 deals. Now, the number of deals has been steadily increasing year on year, and that's been at a compound annual growth rate of about 17%. But what's really interesting is the size of deals and the amount of dollars being invested, right? This year was not as big as last year. Last year, we saw some mega rounds for Souk and Karim that really drove the value of total dollars invested up almost to $1 billion last year. This year, just 651 million. But even if we, again, look, instead of looking at each year by itself, we look at, again, the compound annual growth rate, we see the value is growing at 35% annually. So also similar to the number of investors that we saw earlier. Now, this is the number of investments that have taken place across all years, so it's cumulative, across all countries. And so this is the 2017 report. So over the last 5 years, the UAE has had 298 deals. And then the number next to it is the number from last year's report. So that's 2013 through 2016, right? And that's the percentage here is the percentage change between the two. And so what we can see here, the UAE, again, still far away in the lead in terms of cumulative number of investments that have taken place in the region. However, what I want to remark on is really the places in green, right? Those are the places with the fastest, most rapid growth. And here what we see, Lebanon and Tunisia are 2 of the fastest areas of growth, and we're going to see Tunisia come up again in the report. And what's interesting, Tunisia just in the last 2 weeks approved a law, a startup act of 20 laws to support entrepreneurship and SMEs in Tunisia. They're making a bid to really improve their ecosystem. So I would say definitely a country to watch out for, certainly one that we are watching out for. So Tunisia and Lebanon at 50% year-on-year growth in total deals. And countries down on the list, these numbers are a little bit inflated because the denominator is so small. But what we can see here, really important, Oman had only 1 deal last year, today 15 deals. This can be attributed to the launch of a number of new funds in Oman, like mostly OTF, the Oman Technology Fund, although there's also been the launch of IDO there in Oman. And we expect to see a lot more activity in Oman. The government is also making this a strategic priority. Kuwait, which we saw earlier, increasing in number of investors, also 63% growth. And the rest are really very, very small in terms of numbers and growth. Here, what I'd like to point out again is just and I guess I'll do that in the next few slides. So this looks at ranking by number of investments year on year, country by country, right? This is super broken down. And here, the green, red arrows tell you who's rising in the ranks and who's dropping in the ranks in terms of numbers of investments, right? And so here we see the UAE has been in a solid number one for the last 5 years. Lebanon, as a result of Circular 331, has climbed steadily from 5th to 3rd to 2nd place. Egypt, which had made a drop, and we saw that again. We saw the number of investors pick up in Egypt. Now we're seeing the number of deals pick up in Egypt again. So back at 3rd place here, and I think Egypt is again a market to watch out for. The fundamentals are there. The largest population in the region, the most eyeballs, a lot of entrepreneurs, a lot of technical talent, and now with the exchange rate making it even more interesting to invest external capital into that market. Saudi Arabia has been at a solid 4th, and Jordan has dropped a little bit. But Tunisia, again, here we see the jump from 9th to 6th place, and we're going to see that again, even in the value of deals, they've jumped even higher. Biggest loser, unfortunately, has been Palestine. So Palestine had gone from 7th and 6th place and has dropped now to the 11th place. The funds in Palestine are not investing. There's been a lot of quiet in Palestine. And so we hope that those funds will kick off again in the near future. This looks at the value of deals, so the amount of dollars invested. And here, really, we see the vast difference between the UAE and other markets. So if you look at the left here, 2017, 2016, this is the value in millions of dollars, right? So 800 million out of the 900 million last year were invested in the UAE. This year, 465 out of the 600 million invested in the UAE. And we really can attribute this to the fact that most of the large deals, most of the growth stage businesses are based here in the UAE. So, and whether that's Careem, whether that's people like Stars Play, which raised $125 million this year, those big deals are happening here in the UAE. Lebanon coming in 2nd place. I won't go through them all, but here Tunisia has jumped from 10th place up to 5th place, right? So here, again, we see Tunisia a market to watch out for, really focused on this space. The other thing I want to comment on is while UAE is still heavily in the lead, the investment taking place in other markets is starting to catch up. And so look at just the brackets, 2016, 2017. This is the number of deals that took place in 2016 and 2017. And the first bar is the UAE. And you can see how much the UAE has been ahead historically of other markets in terms of the number of deals. But look at 2016. That gap shrank significantly. The difference between the UAE and Lebanon is only 2. Difference between UAE and Egypt is about 10, with KSA about 20. So that difference has really closed significantly. And so, again, we're seeing a lot of interest from all the regional governments to start investing in technology, innovation, and entrepreneurship as kind of a key growth strategy for their economies. Looking at the value of deals, we said that the deals really are driven by the large-scale deals. The total dollars are driven by the large-scale deals. And so here we see last year, Souk and Careem captured about 80% of all dollars invested in MENA. This year, Stars Play, about 125 million, and Careem, I think maybe 200 million. They captured about 60% of all dollars in MENA. And you can see these are all UAE. Careem, Stars Play, Souk, they're all in UAE. And so still, UAE is dominating where the dollars are going. If we look at business models, and here this is not looking at industries, but how these startups make money. And so I'll define quickly the 5 categories. Transactional, so this is where there's an exchange of goods and services for money. Media, a business built on content creation or advertising. Technology, this is hardware or algorithmic software, and so increasingly machine-to-machine or machine learning, IoT. SaaS, which is software as a service, so it's a subscription in exchange for software. And agency, where there's a scope of work and a tailored scope. And what we can see, the most interesting thing here is the rapid growth of the technology sector. And what we can see here, really, this has been driven by a few major trends. I talked about them yesterday in the opening. IoT, AI, and all of these kind of machine learning, machine-to-machine technologies have been seeing that it's kind of tripled in value over the last 5 years in terms of the number of investments taking place. The industry that's been struggling, on the other hand, is media, falling from about 25% of deals to 14% of deals. Unfortunately, this mirrors the state of the media industry, which has, according to kind of discussions among industry stakeholders, lost 40% of the value in the last 4 to 5 years. 40% drop in budgets in the media sector. How much time? I'm good? Yes, ma'am. Good. So now we talk about death of startups. I have a word, people don't like it, but I will talk about it. And I think we're going to see some interesting things happen around this space. And the word is zombie. What's a zombie? We are in a very fast-moving industry. And so startups that launch and that don't succeed, and usually in a competitive market, those companies would die. Oftentimes in the Middle East, what we are seeing is we are seeing a lot of startups on life support. We can call them on life support, that's nice. I call them zombies. They don't really have a potential to succeed tremendously, but they are still capturing talent and opportunity from the market. I think that this is going to lead into a new trend, things around mergers and acquisitions, consolidation in the market. I think these are things that you should watch out for as some of these zombies start to find out that they can no longer survive, as investors start to pull the plug on them. And we actually have a discussion on this in our investment track later today, focused on generating liquidity, mergers and acquisitions, and exits, and pulling the plug on the zombies. Don't be upset with me, please. So if we look at the startups that are still alive versus those that have closed, about 12% of startups that have launched in the last, or that have received investment in the last 5 years have closed. Now this seems like a very small number. We would expect maybe 80% to have closed. However, this includes startups that just launched last year and just got funded last year, along with startups that have been funded and launched 5 years ago. And so what we dive into is, let's look at one cohort, apples to apples, right? So we start with all the companies that were founded in 2013. This is a very data-dense graph, so I'll walk you through it. 188 companies launched and raised money in 2013. Okay? Of those, 38 became inactive. They closed. Inactive are a nice word for closed. And that represents 20% of the companies that received funding. Of the 188, 41% raised a second round. And that is a 22% second round rate. And again, of those 41%, 6 closed, and that's 15% closure rate. Now, if we look, 44% of those 41 raised a third round, and so on and so forth. Some of the companies have gone on to raise all of 5 rounds. And what's interesting to note here is that after the companies that raised 3 rounds, those 18 companies, none of them have since closed down, right? So once the companies get into a third round or further, it seems that they're in the clear at least for, let's say, the medium term. And we're going to see this reflected also in the 2014 cohort. So remember these numbers, about 20% close after the first round, 22% raise a second round. This is the 2014 cohort, 197 companies raised. And we see, again, 20% closed after the first round, right? So now we're starting to see a trend. 1 out of 5 companies close after their first round within the first 3 to 5 years, right? Again, how many raised the second round? 18%, very close to our 22% in the previous year. So almost 1 out of 5 companies, after they raise the first round, managed to raise a second round. And, yeah, we'll get to that. So, and then again, here you start to see, after the third round, we are not really seeing further failure rates. Now, none of these companies have had a chance to really live out their full life cycle. So we may see many of these companies yet fail in the next 3 to 5 years, right? These companies are not in the clear. They are still startups. So this is something that we are going to continue to monitor year on year and to continue to report the statistics around success and failure. I'm not going to go through the 2015 and 2016 cohorts. They're very early on. What we can tell is even if you look at 2016, only 3% of the companies that raised in 2016 have raised a second round. But these are still very, very early days of these companies. I'm going to wrap up here. We have a few more points. We are going to continue and can dive further into detail. This afternoon, we'll be doing another session in the investment track to dive into further details. You all have a copy of the report on your tables, so you can take that with you. You can also download it, as well as all of our research reports on intelligence.arabnet.me. I don't know if I put that on here, but intelligence.arabnet.me. You can download about 10 reports that we have so far, and all available for free. Fatima, do you have a chance to take Alvaro's question from an investor? No? Alvaro will catch up outside. Fatima's the boss, so I will take her word for it. Thank you again all for this. Thank you to Dubai SME for their consistent support for us, for this report, and for the broader ecosystem. And looking forward to answering your questions and supporting further. Thank you.